Alright, what's up guys? Welcome back to another video. This video we're going to be talking about how to maximize your RR and how to get the best RR possible out of your trade. Alright, so when we're talking about RR, we really have to talk about what your stop loss is looking like, because the stop loss is what's going to dictate how much RR you're going to have and how much RR you're risking. Okay, so let me draw this out real quick. Let's say you have a demand zone right here, and the market's coming out to your demand zone, right? Usually what the average smart money trader does is they find the order block inside of here. Let's say it was a candle right here, a sponsored candle or whatever it is, an order block, whatever, and they simply just take a buy position out of the order block, right? And there's nothing wrong with this at all, right? There's nothing wrong with it at all. It's just the RR is going to be trash, right? Let me see. Let's say if the RR was smaller, because usually nobody's taking a 30 pip stop loss. Let's say they was taking 50% of this, and it was like a 15 pip stop loss. Okay, let's say they was doing that, because nobody's taking a 30 pip stop loss. If the market were to come down here and activate their trade, this would result in 8 RR. What comes the problem is when you have this, you are limiting how much RR you can take on this trade, right? Because the RR you can get on here is only 8, okay? But the other way that you can go about your RR is confirmation entries. Now I can't go over exactly what my confirmation entries are, but what I can tell you is that when you're in the demand zone, you usually want to look for accumulation. Okay, when you see that accumulation on lower time frames, this is how you go about it. When you see that drives, you see a break of structure, you see that accumulation, you take your entry based off of this sponsored candle. Rather than taking it off this entire sponsored candle, you take it off of the smaller sponsored candle inside of this entire sponsored candle itself, right? So now you could have a smaller stop loss. Let's say it was like, let me zoom in here real quick. So you have like a 7 pip stop loss here that you took a trade off of, instead of the 15 pip stop loss. Now your RR is 18 instead of 8, right? That's 10 extra RR you just caught off of this trade. Okay, and the thing about it is when you take confirmation entries, it's exactly what it sounds like. It's confirmation entries. So the problem that happens with just taking order blocks or sponsor candles by themselves is they have the potential to fail, right? They have the potential to fail. Okay, but when you're taking a confirmation entry, you almost know that the market is going to go your way because of this lower time frame, right? Because the lower time frame has to create the higher time frame. If the lower time frame is still going bearish, then higher time frame is still going to be bearish, right? The lower time frame has to shift structure first before the higher time frame can even shift structure, if you understand what I'm saying. So that's how you maximize your RR. Okay, you go on lower time frames and you look for those confirmation entries on lower time frames. That's the best way to maximize your RR, because RR is dependent on your stop loss. If your stop loss is big, your RR is going to be small. If your stop loss is small, then your RR is going to be big, right? So in this case, it doesn't mean just lower your stop loss, right? You want to have an accurate stop loss, okay? Because in this situation, when we're looking at this confirmation entry, we know down here, since we broke structure, if we go below this whatever new order block that was formed on this lower time frame entry, the market most likely going to continue down, right? That's the bias that you want to have on this. You don't want to just get a small RR for no reason. All right, have an accurate RR, right? Have an accurate, because that can still be stopped out as well. You can still get stopped out as well, but the potential on this was greater than the potential on the bigger stop loss. All right, so that's the simplest way of explaining it. Now we're gonna go review a trade about this. Okay, I appreciate the person that told me about this. Yeah, that's so much simpler. I appreciate you, man. So right now I'm on GBCHF. GBCHF. And what I could say is we have a supply zone here, we have a demand zone here, right? I'm not worried about the supply zones up here because that's not where the market is right now. Okay, so what I'm worried about is this accumulation down here. Now I'm not gonna go through and mark it up, but this is an accumulation that occurred down here, and I know this is a demand zone. Okay, so basically when I have this demand zone, what I'm waiting for, I wait for the market to trade inside of this demand zone itself. So I mean, I could set this line right here. That'll let me know that the market is inside of this demand zone, because this whole entire thing is a demand zone. So I'll be looking for entries like in this entire thing. So right now I'm on the 1 hour time frame. What I want to do is go on lower time frame. So I'll go to 15-minute. The first thing you want to do is you want to identify order flow. Okay, you want to see how is the market coming into your demand zone. Okay, so the first thing we want to identify is order flow on this. We want to see the order flow, because that order flow on lower time frame is what's going to give us that entry, right? We want to see order flow shift. So like I said before, we want to see lower time frame shift from bearish to bullish inside of our demand zone. So that's exactly what we're going to look for, right? All right, so right now we can start marking out this order flow that's going on right now. All right, we have a high, low, high, and then we'll just watch to see what this does. Okay, we can stop right there. All right, we don't even have to mention Wyckoff in this, right? Because even though this is some type of accumulation, without even knowing Wyckoff, this is a potential trade for you. For those who don't know Wyckoff and don't know smart money, you don't have to know Wyckoff to be able to catch these lower time frame entries. Just play how you would on higher time frame, but just play it on lower time frame, right? So we know that we're breaking this order flow, right? As soon as we see that we're breaking this order flow, break of order flow, break of order flow, now we can start looking for entries, right? So you see how we just minimized looking inside of this area alone, then trying to just set a limit somewhere on one of these candles. Okay, so now what we want to do is we want to identify some areas, right? I know that this is a reaccumulation here that occurred. Now that this tiny area here is also a reaccumulation, right? So these are my two areas to look for an entry inside of. Now this is technically my candle, right? If I go on a little bit higher, let me go to, I'll use the 45-minute. So this right here is technically my order block / sponsor candle, like whatever you guys want to call it. I don't know, some people call it different things, but it's all the same thing. So this right here is my sponsor candle, right? So this reaccumulation came and mitigated the sponsor candle, right? So our next area that we need to mitigate is this reaccumulation here. And simple smart money, what do we have? Imbalance. Okay, we have imbalance right here. So right here itself is a possible trade. Now we can just scan this and see if there's any smaller type of entry that we want to take inside of here. Looks like everything is filled here. All the imbalance is filled and everything. So what you could do here is you could take an entry alone just off of this candle. The stop loss is only 5 pips off of this order block right here. Sponsor candle, institutional candle, funded candle, whatever. You can take an entry right here. We have imbalance, even though we have this reaccumulation here, right? Think about this, because I know some people would have set their limit here and ask, why am I not setting a limit here? I mentioned before in one of my old videos, what's the difference between this one and this one? All right. This one, yeah, it could be an area that could be reacted off of, but this is where I'd rather take my this is where I'd rather take my loss at. I'd rather take my loss on this area because I know below here there's nothing else to do. I know that if we break this low, the market's just going to continue down. But if we break this, right, we could just react off of this. So I'd rather take my entry here and let the whole area fail, then let this one area fail, and then we catch the market just react off of something inside of here. So that could be an entry right there. And basically what you do is you wait for the market to come down. Simple as that. And your targets are going to be the same as you would if you were taking like a higher time frame order block or whatever. All right, so now what do? We just wait for the market to come down. Okay, so as the market came down, we tapped into our entry, right? Now I know what some of you guys are saying, they break even, right? In my rules, in order for me to go to break even, I need this high to be broken. Okay, this high never got broken, so technically in my rules, I would have still been in this trade, so I wouldn't have got broke even because I'm still looking at it as an order flow, okay, from low to high, right? So this high never got broken, right? After we tapped in here, once my entry taps, I need this high to break before I can break even. So because this high was never broken, I never went to break even on this. Now I don't know about you guys personally, but that's not the point of this video, right? The point of this video is understand that the market did not go past this imbalance down here because there's no reason to go any further because this is the last mitigation they need. All right, and understand that we caught a 5 pip stop loss inside of this area, inside of demand zone, than rather taking like a 15 pip stop loss on one of these candles. All right. And the market ended up exploding towards the upside. All right, now we're reacting off the supply zone. So what are you going to do? You're going to go on lower time frame and examine the supply zone as we did on this demand zone. As simple as that, guys. All right, guys, so that's how you maximize your RR in the markets and how to get those small stop losses. Okay, so let me know if you guys have any questions. Comment it down. Just hit me up, talk to me. You guys can PM me, email me, whatever you need to do, whether it be about the Discord, whether it be about mentorship or stuff like that. And all that stuff is related to the Discord anyways. Like if you're asking for mentorship or anything like that, it's the Discord. Join the Discord, right? That's the mentorship right there, because it's everything is built in the Discord. It's a community, course, and a mentorship, like all in one. All right, so peace out, you guys. I hope you enjoyed your trading week, and I'll see you in the next video.